Greetings, everyone. Welcome to Liberty Cults, Thursday, November 10th, 2022. Hope everybody's having a good day out there. Pretty good day in the markets. I guess everyone was excited that the inflation numbers didn't look as terrible as people expected. The CPI number came in, I think, at a 7.7. So everyone's jumping up and down. Markets are up. The Dow was up over 1,200 points. Unreal. But inflation still did increase by 0.4% this quarter or this month. So again, I think everyone's thinking that the Federal Reserve is going to slow down on their rate increases because of this news. I would hold your horses, folks. I think we still have a bit of a ways to go. So, all right, if it's your first time watching, please give me some thumbs up, like, share, subscribe. Hit the subscribe button wherever it might be next to the screen somewhere along here. And let's go ahead and jump into the numbers for today. Dow Jones was up 3.7%. Like I said, it was up 1,200 points, closed at 33,715. S&P 500 was up 5.43%, closed at 3952. NASDAQ was up 7.35%, closed at 11,114. Small caps are up just under 6%. The VIX fell 9.81%. It's currently at 2351. Canada was up 3.34. Brazil was down 3.61. Mexico up 0.92. Over in Europe, earlier today, Germany was up 3.51. UK was up 1.08. France was up 1.96. The Euro Stoxx was up 3.18. Netherlands was up 3.45. Spain up 1.15. Italy up 2.58. Switzerland up 1.98. And Portugal up 0.8 for the day. Moving a little further east, in Russia, the MOEX was up 2.01. The RTSI was up 3.27. And it looks like all the Asian markets were red overnight. So starting out in Japan, they were down 0.98. Australia down 0.5. New Zealand down 1.49. Headed over to China, the Shanghai was down 0.39. The SCSE component down 1.33. The China A50 down 0.39. DJ Shanghai down 0.49. Hang Seng down 1.7. And the Taiwan weighted down 0.99. So it looks like the European and domestic markets here in the Americas did exceptional, but the overnights were not nearly as good. So we'll see what their markets do today, when they open up in a few hours, and see how they did. All right, well, let's go ahead and breeze through today's market recap. Dow up 1,000 points as slowing inflation stokes hopes for less hawkish Fed. Again, don't hold your breath. The Dow racked up gains Thursday, led by tech after data showing slowing inflation stoked hopes for a less hawkish Federal Reserve rate hikes, pushing Treasury yields lower. Labor Department said Thursday its consumer price index rose 0.4% last month, confounding expectations for a 0.6% rise. Core inflation, which is considered more accurate gauge of inflation, slowed to 0.3% from 0.6%. versus expectations for a 0.5% rise. Quote, the softening of core inflation in the October release is welcome news for the Fed, end quote, Morgan Stanley said in a note, but cautioned that the optimism over slowing inflation could be unraveled should incoming data show labor markets remain tight. Quote, since signs of deceleration will help Fed officials moderate the reduction in the pace of tightening, though a stronger than expected December payroll print, 300,000 plus, could still complicate the issue at the margin, end quote, it added. Pricing in the prospect of a less hawkish Fed, Treasury yield slumped with the 2-year Treasury yield, which is sensitive to Fed policy, falling to 2-week lows, helping big tech surge. Apple, Microsoft, Alphabet were up about 7%, while Meta platforms gained more than 10%. Consumer stocks also regained supreme, with Amazon leading the charge, up more than 12% on bets that slowing inflation pressure could ease the squeeze on consumers and encourage further spending. Home builders led by Pulte Group played a role in the market melt up as bets on smaller Fed rate hikes pushed mortgage rates back below 7%, spurring optimism for renewed demand for new homes. The average rate on a 30-year fixed rate plunged 60 basis points from 7.22% to 6.62%, Mortgage News Daily reported, on bets that the smaller rate hikes could help. In earnings news, Six Flags Entertainment surged more than 13% despite reporting quarterly results that fell short of Wall Street estimates. The theme park operator, however, said it had struck an agreement with investment firm H Partners, allowing the latter to up its stake in the company to 19.9% from 14.9%. Rivian Automotive left its production guidance intact and reported a narrower than expected loss, sending its share price up more than 19%. Bumble, meanwhile, cut its losses to trade 9% higher amid the broader market rally, even after delivering softer guidance and third quarter revenue that missed analyst estimates as the impact of a stronger dollar and ongoing Russia-Ukraine war weighed. I'm not sure what that has to do with Bumble, but anyways. All right, so a pretty positive day in the stock markets. Like I said, most of this is generated by the hopes that the Fed is going to slow down their rate tightening. Again, I wouldn't get too excited about that. We still have a long way to go before inflation is truly tackled. Also, in the commodities markets, they were way up again today. Oil, gold, silver. But I think a lot of that had to do with the dollar index falling about 2.5%. That has a inverse relationship with commodities. All right. Just got some jobs news. U.S. weekly jobless claims rise more than expected to 225,000. The number of Americans filing for unemployment insurance grew by more than expected last week, according to the Labor Department on Thursday. Seasonally adjusted initial jobless claims rose to 225,000 for the week ending November 5th, increasing from an upwardly revised previous reading of 218,000. Economists had estimated that the figure would come in at 220, so they were off by 5. I mean, that's not dramatic. The 4-week moving average, which aims to account for volatility in the data, was broadly unchanged, dropping by just 250 to 218,750. Meanwhile, continuing claims, a measure of the number of unemployed individuals who qualify for unemployment benefits, unexpectedly moved up by to 1.493 million from 1.487 million the prior week. Economists had predicted a decline to 1.475 million. So they were off by about 18,000, it looks like. If this number keeps climbing, it could be a sign that more Americans are out of work for a longer period of time. So again, these numbers are pretty good, considering historical norms. So wouldn't get too freaked out. I think the jobs numbers will probably sag a little bit after the first of the year. So I'd give it about 8 weeks, and we'll probably start to see a lot more. The unemployment numbers start to rise at that point. All right. Last article we got here, U.S. inflation turning the corner as consumer prices rise below expectations. U.S. consumer prices rose less than expected in October, pushing the annual increase below 8% for the first time in 8 months, the strongest signs yet that inflation was slowing, which would allow the Federal Reserve to scale back its hefty interest rate hikes. Again, these journalists have all year long have just been chomping at the bit to be the first ones to predict when the Fed is going to slow down their rate hikes and bring rates back down. Which we're seeing what's happened with having rates at such a low point for such a long time. Basically from 2009 or 10, the Fed funds rate was held at 0 until 2015 or 16. And we've just built up a lot of inflation in the economy, and it's rearing its ugly head, especially after increasing the money supply by 40% over the last 2 years. So, all right, jumping back in. But the fight against inflation is far from won, with other data from the Labor Department on Thursday showing a moderate increase in the number of Americans filing new claims for unemployment benefits last week, pointing to a still tight jobs market. Nevertheless, the rare good news on inflation sparked a rally on Wall Street and sent U.S. Treasury yields tumbling. The dollar slumped against a basket of currencies. We already talked about that. Quote, inflation is still too high, but there is evidence that the Fed has turned the corner in its fight and that the pace of future interest rate increases will begin to slow, end quote, said Christopher Rupke, chief economist at Forward Bonds. Quote, the market is on fire with the long wished for inflation moderation finally starting to appear, end quote. The consumer price index rose 0.4% last month after climbing by the same margin in September. Economists polled by Reuters had forecast the CPI would advance 0.6%. Soaring rents accounted for more than half of the increase in the CPI. Gasoline prices rebounded after 3 straight monthly decreases. While food prices increased 0.6%, the pace was much slower relative to prior months. The price of foods consumed at home rose 0.4%, the smallest gain since December of 21. There were increases in in the prices of meats, poultry, fish, eggs, cereals, and bakery products, but fruits and vegetables cost less. In the 12 months through October, the CPI increased 7.7% after rising 8.2% on the same basis in September. It was the first time since February that the annual increase in the CPI was below 8 and the smallest gain since January. So there's a little more here if you want to read through it. The article is linked here in the show notes. So again, some good news. Let's not, be the Debbie Downer and say, oh, it's just all terrible. There are some good, bright spots out there in the economy. But, again, inflation is high. Who can we blame? The Federal Reserve. They're the number one culprits for all the problems we're dealing with. We probably could have managed through the whole Corona stuff 2 years ago without, all the reckless spending. Yes, we probably would have gone through a downturn that year because we were due, and the tea leaves were telling us that in late 2019. But hey, the markets went up for another year and a half, and now we're just dealing with the same problems all over again. All right, well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. You can find all my contact information, book a meeting, read through all the entertaining stuff I have on there, and hope everyone has a good night. I'll see you guys tomorrow with the weekly wrap-up. Y'all have a good evening. Bye-bye.